How to use the Fibonacci tool the proper way. There are a variety ways of using the Fibonacci tool. Traders use the Fibonacci tool to find significant price levels in the market. Personally, I use the Fibonacci tool to identify my premium and discount levels, and I equally use it to confluence the strength of my zone. Okay, so this is exactly what I'll be showing you today. So if you are totally new to this channel, consider subscribing to the channel. I'm full of more wisdom, and here is Born to Trade. Let's get into the video right now. To get the Fibonacci tool, it's located right here. Here is the Fib tool, and once you start the Fib tool, it will be added to your favorite tools. Okay, so here is my Fib tool, and I want to show you the configuration of my Fib tool. These are the levels of my Fib tool. I have the 0 level, I have the 0.618 level, I have the 1, I have 0.5, which is the equilibrium level, I have the 0.786. So these are the levels I have on my Fib tool. Okay, now how do we use the Fib tool? If the market is pushing up and you are in an uptrend, what you want to do is to mark out your swing low and your swing high. Okay, so this is your higher low and this is your higher high, and you'll be using the Fib tool to measure from your higher low to your higher high. And what you can see from here is that from the 0.5 level to the 0 level, this is what we call the premium level, and we usually sell at the premium level. Okay, and from the 0.5 level to the 1 level to this level right here, this is your discount level, and we buy from the discount level. So looking at this diagram on your screen, the little diagram I drew here, this one, you can see that you are in an uptrend, and from here you know that we have a zone right here. We got a little pullback before the continuation of the move to the upside. We equally have another zone over here, and we have the extreme zone right here. We smart money traders, when trading, we usually get confused when we see things like this, and it's hard to know the actual zone to trade from. Sometimes it's very hard to select the right zone. So one of the ways to select the zone is using the Fib tool to measure, then decide. Remember, I said we buy at the discount level, and looking at this particular zone right here, you can see this zone is at your premium level. This tells you that this zone is not valid at all, and we don't buy at the premium level, instead we sell at that level. Okay, so this helps you to get rid of that zone. Now you have 2 more zones. So one thing I need you to understand is that I don't just trade only the Fibonacci levels. For me, I don't trade the levels, I use it as a confluence tool. To get a high probability setup, you need to get as many confluence within your trading strategy. So I just add the Fibonacci tool as my confluence tool. Okay, I see a lot of traders coming to trade this level. You know, the 0.786 level is a very strong level, and anything below that level is a very strong zone. What I do is I map out my zones and I trade the zones that align with the levels. Okay, and not only that, I equally confluence this with other smart money concepts like imbalance, liquidity, and so on and so forth. I know you understand all that. Okay, so like I just said, the first zone right here is totally invalid because that zone is located at our premium level. So what we want to do right now is to wait for price to come back, tap into this zone. This particular zone aligns with the 0.618 level, and you can trade from that zone. That is what you need to do, is waiting for lower time frame confirmations to trade from that zone. And if the zone fails to hold, you can wait for the extreme level. And what you need to understand is that this extreme level is a very strong level because it's resting at the lowest area of the discount level, and you can equally look for entries right here and see to trade to the upside. Remember, I said you can confluence this with other smart money concepts like liquidity and so on. So if price builds liquidity above your zone, so this is a good sign. You can look to trade from there. Sorry, my drawing is not really straight. You can look to trade from there. So same thing goes for a downtrend. What you need to do is to identify your lower high and your lower low, and the next thing to do is to measure your Fib tool from that lowest point to the highest point. And what you're expected to do is to select the zones that are at your premium level, because we'll be selling from that premium level. Okay, so like I said, the zone at the extreme is usually the strongest. Zones from the 0.786 levels are usually the strongest level to trade from. Okay, so let's go to the price chart without wasting time. Let me show you what this looks like on the price chart. Now, what can we see from here? we are in a downtrend. Yeah, yes, price is in a downtrend, and over here we got a change of character. So we want to understand that change of character usually signify change of trend. That is, price is ready to change direction. And here is a break of structure. You see, this is a pullback before the break of structure, and after the break of structure we expected price to continue pushing to the downside, but over here what we see price coming to break our lower high. Okay, price broke above our lower high and continues to push higher before we start seeing this retracement to the downside. And one thing you need to know is that we have a very good point of interest right here. This is our demand zone. It could equally be your order block. Okay, what you want to do right now is to bring your fib tool, select your fib tool, and measure from that low to the highest point. Since we have only one zone, see the zone aligns with the 0.786 level, and this just increased the strength of your zone. Okay, so playing price forward, what do we see? Price came very close to the zone, but it couldn't get to our zone. Instead, it fueled the inefficiency right here, and price pushed to the upside. So this tells you that these levels are a very strong levels, and like I just told you, we buy at a discount level. So price came into the discount level, coming below the 50%, which is the equilibrium level, retraced into the discount level, but couldn't make it to our zone. Instead, you see price buying off that level that is below the 0.618 level. Okay, so this is equally okay, and you see price didn't get to this zone right here. So when price pushed without coming to your zone, you map out your break of structure, and now you have another zone right here. We have a zone, although the price action right here isn't really clean, but you can equally map out a very good point of interest from here. Depending on how you map out your zones, we equally have another point of interest over here, and what you need to do is to use your fib tool again. Use your fib tool, and you see this zone is at a very strong level. You see this zone aligns with the 0.786 level. You can see that it aligns with that level, and praying price forward, you see price continues to push higher. So what you do is measure it again and see if your zone aligns with that, and you can equally see it's still the same. Here is where we got the major pullback, and you see your zone still aligns with the level. Okay, so we have another zone here. We have a zone, a hidden zone right here. You know, we have hidden zones at the wick of candles. So the zone is just after the equilibrium level. What you want to do is to wait for price to come to these strong levels, because these levels, this 0.6 and 0.7 level, are a very strong level. Okay, so playing price forward, what do we see? We see price coming into that level, and now we see price expanding out of that level. So this is a really simple concept. We don't trade the Fibonacci tool, we don't trade it. This is a question I've been getting a lot in my DM. We don't trade the Fibonacci tool. What we use the Fibonacci tool is as a confluence tool. We use it to confluence our zones, to check if our zones is at a strong level. Okay, we use it to check if our zone is at a strong level of supply or a strong level of demand. And we can, like I just said, we buy at the discount level and we sell at the premium level. This is what you should keep in mind. These are really simple concepts. So like I've been saying, you don't just trade these levels, you equally add other smart money concepts to build a high and a better trading setups. That's it, and I hope you got value out of this video. So this is still me, Solomon Wisdom, aka Born to Trade. Like I said at the beginning of the video, if you are totally new to the channel, consider subscribing to the channel, and if you have interest in joining my Telegram channel, I share free setups every new week on that Telegram channel. So consider joining the channel, and you can equally follow me on Instagram. The links are in the description box. Okay, so thank you very much and have a nice day.